Here, and thank you for the kind introduction. And yes, my title is Exchequer Secretary to the Treasury, which I think is one of the grandest titles for a junior minister, and it means essentially Minister for Tax, but I thought Exchequer Secretary to the Treasury sounds so grand, I thought I'd research the history of the title, and I found it goes all the way back to the mid-1990s. It's a great pleasure to be here today, especially to discuss such an important topic. Small and medium-sized enterprises really are the engines of growth, and it's crucial that we work in partnership to explore how to get the most from such businesses. We all recognise their contribution to the economy. They're responsible for almost half of the UK's 900 billion private sector output, and around 60% of private sector employment, some 14 million jobs. Supporting and encouraging those businesses is at the very core of our programme for economic recovery. A recovery built on private sector enterprise, innovation and exports, not unsustainable public sector spending. We are taking wide-ranging, decisive action to make sure the UK is the best place in Europe to start, finance and grow a business. Before I expand on this, I should touch on our action to tackle the deficit, because securing economic stability is an essential precondition of strong and sustainable private sector growth. As you'll know, the government's priority has been to tackle the legacy of profligacy that we inherited on coming to government, a deficit that was forecast to be the largest in the G20, with the largest gap between what we raised and what we spent in our post-war history. We need only look at our euro area neighbours to see the damaging consequences of failing to consolidate. Instead, by securing our stability, we have secured record low interest rates that help families pay mortgages and businesses secure loans. We know that we face substantial headwinds that affect our recovery. Britain cannot cut itself off from what happens elsewhere. As our biggest trading partner, problems in the euro area affect us too. However, our decisive action has earned credibility, and we have positioned the UK as a relative safe harbour. But economic stability alone will not drive our recovery, and the government is doing everything possible to get the economy moving. In particular, I want to talk about tackling the challenge that small and medium enterprises face in terms of access to finance, a point that, Tim, you just made a moment or so ago. We know that SMEs face a tough lending environment. The protracted euro area uncertainty continues to undermine confidence and lending across the global financial system. As a result, banks continue to deleverage and build their capital buffers to safeguard against continued turbulence. And in the venture capital markets, the amount that has been invested in SMEs across Europe has collapsed from around 6 billion euros to around 3 billion euros. But we have not been complacent in the face of these challenges. Last year, through Project Merlin, we secured agreement with the UK's largest banks to provide £190 billion of new lending to UK businesses, £11 billion more than the previous year. And in March this year, we launched the National Loan Guarantee Scheme to provide smaller businesses with a turnover of up to £50 million access to cheaper loans. Through the NLGS, the government is using its hard-earned budget credibility to pass on the benefits of low interest rates to smaller businesses so that they can get cheaper loans, grow and create jobs. 10,000 loans worth over £1.5 billion have already been offered to small businesses since the scheme launched 3 months ago. In addition, the Chancellor yesterday confirmed that the scheme will be extended to allow more businesses to benefit from the cheaper finance available through the scheme. Now businesses with up to £250 million annual turnover will be eligible, meaning that 99.9% of UK businesses could now benefit. However, whilst bank lending will remain the predominant form of finance for SMEs across the UK, we are also taking decisive action to explore and expand non-bank lending channels, increasing choice and opportunities for business to access the finance they need, and addressing the so-called equity gap in the provision of risk capital for SMEs. The Enterprise Investment and Venture Capital Trust Scheme schemes are critical to tackling this gap. Together, they've helped support over £11.5 billion of investment into SMEs in the United Kingdom. And we have taken a series of steps to improve and simplify these schemes so they can be even more successful. For instance, increasing the company size limits that VCTs can invest in to 250 employees and gross assets of £15 million. We are also increasing the limit on the total amount companies can raise under both the Enterprise Investment and Venture Capital Trust schemes from £2 to £5 million. At the same time, we are refocusing VCTs to ensure that they remain targeted at those companies that are genuine high-risk investments with high growth potential. Both the EIS and VCT have a huge role to play in ensuring SMEs have access to risk capital that they need in the early stages of their development. To encourage more of this, we have implemented the Seed Enterprise Investment Scheme to promote early-stage investment on smaller, high-risk startups. We're kickstarting that scheme by offering a capital gains tax holiday for investors, helping ensure that the scheme can provide critical support to today's young startups that have the potential to become tomorrow's giants. These are schemes that work hand in hand with direct intervention by government to support investment. £380 million of commitments through the enterprise capital funds providing equity finance for small, innovative companies. £150 million to the UK Innovation Investment Fund to invest in technology-based businesses and startups across the EU. Support for the UK's biggest banks in establishing a £2.5 billion business growth fund to provide equity finance to established and growing businesses. And the Funding for Lending scheme that will help to reduce the costs of finance for business. Just as it's important to ensure that our smaller startups have the risk capital they need to take their first steps, it is equally important that we support those businesses to capitalise on their initial success and secure their sustained success. Through the Business Finance Partnership, we have allocated £1 billion to invest in funds that lend directly to mid-cap businesses. And such has been the overwhelming response to the scheme, we have decided to increase the scheme by 20% to £1.2 billion, including £100 million for new sources of innovative financing, such as peer-to-peer platforms and supply chain financing. Furthermore, we are increasing the incentives to lend to smaller businesses under the Enterprise Finance Guarantee Scheme by raising the government guarantee on lenders' portfolios from 13% to 20%. On top of that, the recently announced Funding for Lending scheme will support credit for the whole economy by making it easier for banks to lend to businesses and families. It will work by reducing bank funding pressures, which are increasing because of instability in the international markets, in return for additional new lending across the whole economy. But we have not stopped there. It is essential that we go even further in the year ahead and ensure that businesses can access the support they need from an even greater variety of sources. We fully welcome the report of the Industry Review of Non-Bank Lending, chaired by Tim Breeden, and in the year ahead will take forward its recommendations, including how to simplify access to government support for smaller businesses, how to encourage prompt payment by larger firms, and how to remove barriers to alternative sources of finance. These are ambitious steps to ensure that business across the UK can secure the finance they need to invest, grow, and create the jobs that we need through the recovery. And they're enhanced by a wider range of actions to achieve our ambition to make the UK the best place in Europe to start, finance, and grow business. Of course, a competitive tax rate is vital. We plan to cut the main rate of corporation tax to 22% by 2014. That's a plan to have a headline rate which is dramatically lower than that of our competitors. We have also lowered the small profits rate of tax to 20%, increased the national insurance contribution threshold for employers, and extended the small business rates relief. But the cost of taxation is also about the burden of compliance. Making the tax system simple to understand and easy for business to comply with will further reduce costs. It's important that the tax system is even-handed, no matter the size of the business, and that it creates a level playing field between the vast majority who get it right and pay the correct amount of tax, and the minority that don't. But that does not mean a one-size-fits-all approach. We're concentrating on making tax easier, quicker and simpler for small businesses so they can get on with what's important, running and growing the business. The Real-Time Information Programme, or RTI, will streamline PAYE reporting for all businesses. Linking reporting to existing payroll activities will mean no additional end-of-year processes, and fewer processes reduces the cost and complexity of compliance. Of course, we recognise the importance of ensuring transition to this system is as smooth as possible, and HMRC is already piloting this programme through 2012-13, and will provide clear advice and guidance about the programme. And for those businesses who do not currently use payroll software, they will provide a basic PAYE software package. In addition to this scheme, the government is introducing a new cash basis to make it easier for small businesses to calculate their tax, providing an online dashboard to allow businesses to see what they have paid and what they owe, and providing improved information, advice and support for businesses in calculating and paying taxes, all of which will make it easier for businesses to manage their tax affairs. SMEs will be able to grow in a competitive, fair and simple tax environment. But we're going further in order to ensure that this growth can be sustained in the medium term. Beyond the tax system, we're pulling off some of the regulatory brakes. Through deregulation, the government saved businesses over £3 billion last year. We're also developing a workforce which can provide the people and skills these businesses will need to employ. An enterprising and productive society rests first and foremost on the talents and ambitions of its community. If business is to be the engine for sustainable growth, we need to fulfill our ambition to create a more educated workforce, and one which is the most flexible in Europe. We're working tirelessly with schools, universities and further education colleges to help foster the entrepreneurial spirit at all ages across all parts of the United Kingdom. The government has established a task force of UK business schools to examine ways to improve the management capability and skills of mid-sized businesses, reporting in October 2012. We're also implementing a package of reforms to enterprise management incentives to further support SMEs to recruit and retain talented employees. We created over 450,000 new apprenticeships in 2010-11 and will be increasing young people's access to high-quality work experience by investing over £4.5 million over the next 2 years to support work experience. It's imperative that support for growth of small and medium enterprises is a key part of our plan for growth. They continue to be the backbone of our economy. Government's primary task has been to secure the stable economic environment which underpins private sector growth. But ensuring recovery in these times means going further and taking radical steps. It means ensuring that SMEs have access to finance at all stages of development, from the one-person startup to the mid-cap emerging force. It means removing the burdens of tax and regulatory compliance. And it means providing the workforce and society which values the business and enterprise which will be so crucial to our economic recovery. Thank you very much.